Good morning, Advantage members. It's Tuesday, September 21st, 8:15 a.m. my time. Prices of Bitcoin currently at $43,300. We have lifted from the lows of about 7.6% and about $3,000. It looks like a majority of the selling has probably taken place. We now need to see if we can maintain above this area right here and start pushing back up, at least back up above 44 and hopefully above 47 at some point later this week or next week. Ideally, you want to be able to wipe out the entire selling of this move by marching back up inside of it like this. That will indicate that this move, for the most part, was largely driven by fear. It was largely a shakeout, and now the market is ready to go back up. If, however, we stay in this area and we just move sideways here, there could still be more fears that we might have another leg down in the market, analogous to what happened right here, where everybody thought we bottomed here. We printed two big hammers, well, one hammer and one doji, right? If you could see right here in this area, right here. Okay, see, that was a hammer, a doji, and then big red candle, red candle, red candles down. Now, I'm not saying that that has to happen here again. I'm just letting you know that just because we've printed 2 or 3 big sell candles and now we're printing a hammer does not mean that this has to be the bottom. You still need continuation back up. It's very simple, right? Everything in the market requires some form of base, some form of backstop to be put in, and some form of continuation. And as of right now, we don't really have anything other than a pause. There are some interesting developments in the options space as well. From Deribit Insights, what you could really recognize from the summary of this post, and you can find this on my Twitter feed, is effectively that a majority of the selling did take place. Options skew and options data suggests that near term we are bottomed, excuse me, but options data is not necessarily pricing in the fact that we are going to start recovering. We're not seeing heavy activity of call buying. We actually saw calls being sold in 36Ks and 40K puts being bought. So that to me was kind of interesting, but who knows? Maybe the bulk of the selling is done and these were just protection option strikes that were picked up. We don't necessarily know, but for the most part, if you could pick up on this options thread, all I can ascertain from this is that near-term hedges were put on, some downside risk is still in the environment, and we now need to see if that downside risk is going to continue or we're going to start moving back up, in which case, hopefully, these options volumes on the puts should alleviate, and hopefully we start seeing more activity on the call side. Okay. Other than that, I didn't see anything special as per this options review. Let me see if there's anything else. I pointed this out yesterday, right? About 12 hours ago, as you could see, I told y'all that the last 24 hours have been brutal with really no signs of buyers. The overnight session possibly might set up for another leg down. Just be careful. Now, the next leg down pretty much happened right at the new daily open. Okay, so this is where the new daily opened yesterday, this candle right here. And then we broke down for the first 2 or 3 hours and then quickly recovered back up within a span of 4 or 5 hours right after that daily open. Okay, so point is that we may have already completed the bulk of the selling just yesterday itself, and now we're starting to recover our way back up. The interesting thing that I find about the market is on the altcoin side, aside from the options activity, which kind of tells us that things are iffy, but not as terrible as we may think. One thing that I really dislike is that good altcoins and pretty much, most perennial DeFi altcoins have effectively broken out of, previous resistance and previous structure like this, and then come back basically inside that KSR level. So effectively, one could look at this on a higher time frame as a bearish SFP. You could look at this as a failed breakout. It doesn't matter which way you cut it. Point is that you failed to materialize on the breakout. If it was a real breakout, you would have quickly come back into this area, retested it, and then shot back up. But you didn't do that. And this is a strong asset. AVAX, one of the strongest performers over the last 2 or 3 months. So the point is that when AVAX does something like this, when we had another big breakout from Algo, right? If y'all remember this, see, Algo also did the same thing, right? This is all previous resistance area right here. You broke out with a multi-billion-dollar, buying activity above this area, then collapsed back down. So when you fail breakouts like this and you come back inside KSR, okay, that is an indication that something is truly wrong in the market. A perfect example of this is Radium when it formed its own deviation up here. If y'all remember, we had actually gotten out of Radium like somewhere in the middle of this sell candle several months ago, because we recognized that, hey, this looks like a deviation. It looks like the market as a whole is getting sold. Now, we were luckily able to get out of that because of the fact that we recognized, hey, this could be a fake out above the range high and a big sell-off coming off the deviation. Again, something similar is once again happening. Now, with Radium, it's a little different because we are, for the second time, coming back into this area, right? So nonetheless, this resistance right here has gotten weaker. The sellers have gotten weaker because simply of the fact that you've come back here now, not once here, but twice, okay? So even though we can once again look at this as a deviation, we have to assume that the sellers are now weaker than they were several months ago. And that's fine. But that doesn't mean that this time around, we still may not get maybe just another few days or few weeks of sell-off and then start our way back up, in October and November. So this is abundantly clear, not only with Radium, not only with AVAX or Algo, but it's clear with many other altcoins. Here's FTT for another clear example, right? Previous resistance back in May, right? This is April and May. Once again, breaks up above that area, deviation, breaks back down inside. Not a healthy sign. No matter which way you cut it, this is not a good sign. So effectively, this, in my opinion, is a sign that the market is not showing healthiness, especially from the fact that you've had big breakouts like this, big breakout movements, because what it's effectively telling you is there are some really powerful sellers in the market, whether it's this whole Evergrande situation, whether it's US equities being dragged down, it doesn't matter. Point is, you failed to materialize on the breakout, and there are consequences to pay once you form a deviation like this, or once you fail a breakout. And those consequences mean that maybe a further correction down, or maybe you stay here, sideways for a couple of weeks and then break back up, right? We don't necessarily know which way it's going to go, but the point is you got to be prepared. Another clear example of this, one of my favorite altcoins is Sushi, right? Once again, you can clearly see that on the 1 hour, there's a very nice inverse head and shoulders printed right here. If y'all remember, I pointed out this trade to Advantage members several days back, and some of y'all took that trade and you make some great money off it, right? Here is that Sushi trade. When it was just materializing as an inverse head and shoulders, I pointed it out at 1250 or 1225, sorry. And I told y'all, target profit could be around $14 to $15. Well, we got all the way to 16, but then guess what? Everything fizzled out and the whole market just completely sold off. You actually broke back inside the neckline right here, right? And you broke down basically further. You even took out the right shoulder, the low of the head, everything. So once again, failed breakout, right? So these are multiple assets now I've pointed out at Algo, FTT, AVAX, a similar example in Radium as well, and now Sushi. So what does this tell you about the current environment? The current environment right now is effectively screaming that something is probably happening that's bigger in the market that might scream another rotation, maybe back in BTC, or maybe altcoins are going to get hammered some more. Maybe this has to do with the whole thing we're talking about with BTC dominance, right? Something very clean and simple, in my opinion, is dominance of BTC. Whenever it hits key lows, if dominance starts moving back up and Bitcoin prices start moving back up, altcoins start getting sold off. It's a very clear sort of pattern that we recognize. I don't necessarily give that much weight to the dominance factor, because if you really think about dominance, all it really is Bitcoin's market cap and strength over everything else, over every other crypto. Like, of course, there's going to be some form of that. It's like if you pick Apple from the S&P 500, in some way, Apple has its own quote unquote dominance over the S&P 500, right? But Apple doesn't necessarily, in that case, drag down every other company, because every other company kind of operates to its own momentum, its own fundamentals, its own, technically driven nature. The reason we pay attention to dominance a little bit is because Bitcoin still has a pull on the rest of the altcoin world. And that's why we have to at least pay attention to dominance. Doesn't mean that this is the holy grail of everything. It just means that it is just another arsenal for our indicator analysis. Okay. So we've pointed out multiple assets that have failed to materialize in terms of a breakout. We talked about Bitcoin dominance. I think the other main thing to talk about is probably ETH. Even ETH, I told y'all yesterday in the video, I think we were somewhere up here on 3100s. I told y'all I was looking for a sweep of this low, and now that we finally got it, honestly, there's really no need for ETH to go down further. I mean, it obviously can, but I'm saying that a majority of the sweeps down here for liquidity have been taken. I'm fairly confident that if you do some volume analysis in this area, right, especially like say in a smaller time frame, there's probably a good chunk of stops that got hit down here. This candle right here had a volume of 96,000 ETH. This volume candle right here had 127,000. So point is, good amount of activity took place at this low, but not necessarily implying that this is the low. Okay, so once again, as we head into later this week or tail end of September, the only thing that I could say is, we still need that continuation to the market. Now, if you were to ask me the probabilities of this being a bottom, I'd say they're pretty high, maybe like, 55, 60%, but I wouldn't say that this is the bottom in terms of 80 to 90% probabilities, just because I don't really know how this whole Evergrande situation is going to play out. I really don't know if it even has anything to do with it. Maybe it's simply the fact that there's just a moment of de-risking that's happening. Maybe it's just selling out of fear or panic. We don't really know. But what I do know is there's a lot of money in the world, and that money is looking for a place for yield. And that could mean US equities, China equities, or crypto, right? So the money has to go somewhere. And I can't imagine money not going into crypto, especially in an environment where interest rates are low. All these things that I've marked off on my checklist are still active. Really no macro changes taking place. I think today maybe there's a meeting coming up from Gary Gensler, the SEC chair. Maybe in some way that's going to impact the markets, right? I don't necessarily know if it's going to be a positive thing or negative. Gary Gensler has been kind of like wishy-washy. He's never been super pro crypto, but he's also not been aggressively negative or critical of it. So a neutral stance, in my opinion, is fine. There's nothing wrong with it, okay? Especially as someone who's a regulator, he can't just outright just say, all right, guys, you're free to use DeFi, without our purview. I think the way the SEC and CFTC look at the market is they want to be able to track flows and basically have majority of the control of crypto and DeFi under their purview. And that's just not possible because in a decentralized world, that's not what you're supposed to be able to do. So I don't think these guys really understand what is the ethos of crypto and why exactly it matters to a majority of us. And I think this is where we see a lot of headbutting between the regulators and people within the crypto space, because we don't want a world where we have to KYC into MetaMask or DeFi farms or pools, etc. Right? These DEXs. We just want a world where we can seamlessly move money through our wallets, through our digital wallets, and we don't want any part of the government in it. And they don't see a world like that, at least not yet. So this is where we see a lot of headbutting from the regulators into crypto. And this is why you see volatility coming into effect every now and then, especially when people from the SEC or people like Gary Gensler or Janet Yellen, they make a comment about crypto, you see some whips on the market. And on top of that, it's September. I already told y'all shit gets weird in September. So just expect it to be weird, embrace it, embrace the volatility. I've already told y'all I'm just kind of sitting in spot, really not taking a whole lot of trades here and there. I did point out a bunch of trades to y'all, even yesterday, just in case you were to see some downside sell-offs further. These are some of the levels that I've listed. I think these levels are still possible, but again, if we bottom today and we start ticking back up, then who knows, right? We may not come close to these levels anytime soon or for like months or years, but in case we get sell pressure to the downside, you could kind of see, some of the levels below based on these charts. All right. Aside from that, that's it. Nothing else on my Twitter feed. Okay, cool. Well, take care, everybody. Have a good time in the market. Again, you don't need to be actively engaged in this market. You can choose to sit out. You can choose to not be in a position, not to put your capital at risk. Y'all take care. Have a good rest of your day. Talk soon. Cheers.